Hey everybody, today is Friday, February 14th. Happy Valentine's Day and happy Friday. Want to take a moment to introduce you to our new newsletter before we get into sort of the market update. The Surfing Bull, interesting story behind it. Don't have time to get into it today. Rest assured, it's embarrassing and humiliating to me, but entertaining for most everybody else. But it was inspiring in the lessons learned in my first adventure on a surfboard. So that is the title moving forward until maybe I have another embarrassing adventure. But for now, this edition contains the 2024 and 2025 tax updates and changes, contribution limits, all the goodies that you need until Doge gets ahead of the IRS. But for now, this is what we're going to roll with. Okay. So check out this latest edition. It's in the description, or links in the description below, as well as attached to the email if you received an email to this newsletter. If you'd like to get an email invite for the newsletter, you can go to DeAndreFinancial.com and subscribe there, or you can just subscribe here on YouTube, click the little notifications and rings and all that jazz, and you'll get that information. But believe it or not, the news cycle has been a little interesting. I don't get a lot of calls about, where's the market going. I think people understand we're looking at that really aggressively on a regular basis, but got a couple calls, thought I'd put some notes together so that we can focus on price and not be focused on the news cycle, not be focused on the latest comment, good, bad, indifferent, whatever your opinion is of the news cycle or those comments. It shouldn't cloud our judgment. The only thing that should drive our investment decisions is, aside from your personal situation, is the market itself. It's the price. It's the price relationship between the available assets that we have to invest in. And so we want to focus on that here today. Starting with a custom index. This is our momentum versus low volatility index. And right now, that baby is happy. It is pointing strongly into the direction of momentum. And when we have price momentum to the upside in our equities, we want to continue. We want to ride that wave, if you will, and continue to enjoy the positive returns that brings. Now, if this rolls over, can it roll over? Absolutely, it can roll over, like it did here in 2022, where it gave us a really pretty good idea that things weren't going to be so great, maybe on the intermediate or long-term basis. But as for right now, things look good, and we're very pleased to see this momentum indicator where it is because we are aligned with it. Next, we have our custom defense versus offense indicator. Okay, we need to know what kind of plays to run, what kind of market are we in, what type of field position do we have. This is another indicator, another custom index that helps us understand where are we, who has the ball, and who is in control. And right now, offense is in control. Even though we have this column of O's, this trend is overwhelmingly positive, and we want to stay aligned with it. Okay, now, why do we do this? Why do we go into these details? Well, we go into these details because we know that playing good defense is important. In fact, if you're one of those people out there who was really excited about the Eagles and you noticed that there were 0 blitzes with 6 sacks, that's pretty impressive. That is a pretty spectacular offense. Spectacular defense. Excuse me. I wanted to turn that audio off a little bit. We've seen Mahomes get smashed in the face enough here lately, but defense wins championships. You hear it over and over again. You got to play some offense, but protecting the ball, protecting your field position, that helped the Eagles dominate the Chiefs in this game. And it helps our portfolios when things get tough and we need to start running defensive plays. We're always glad we did. We need a barometer, though. We need a way to know when when we should be running offensive plays and when we should be running defensive plays. And this momentum and this offense defense custom indices, those are the first places we go to get some of those tips. Next, we want to go into a more granular view of the market. So we're going to look from the start of 2025 to today, and we just want to see if there's any rotation afoot. What's going on and in the asset classes that we track to see where should we be aligning those assets. If we're on offense, where's the best place to throw the ball? Where should we be? And we see that the precious metals index has made a nice strong move so far in this year. And we see information technology The bastion of growth markets and bull markets, tech, maybe taking a little bit of a back seat. Still in the top half. Okay, we're not necessarily throwing these all out in the garbage. We're still well into the top half of the ranking, but nonetheless, it's kind of curious to see that we have rotation taking place right around the S&P 500. So the S&P hasn't moved, it's right in its normal spot, but under the surface things are changing. We want to respect that change and align with it when appropriate. If we take a more granular view here, we see this is technology, gold, making just a massive move, and our technology stocks really haven't reasserted themselves yet. And you can see it reinforced down here because the technology stocks are underperforming the S&P 500. If they weren't, they would be above that orange wave, if you will. And the gold stocks, well, they are doing quite well versus the S&P 500. So you're not only seeing the outperformance relative to each other, tech versus gold, you're also seeing it against the broad market and the S&P. Not a bad place to be right now. Okay. Another area we're just starting to see this play out is in materials and industrial stocks. Industrial stocks have had a great last 3.5 years. Materials not so much, and we see a sort of cascade of lower highs in the industrial space, and we don't want to see that type of behavior right now. We want to see this type of behavior where we have, let me make that a little bit cleaner. We have this reversal with a little consolidation, and then this burst out of that consolidation. And also down here, outperformance versus the S&P, not outperforming versus the S&P down here. So this is another area for us to be mindful of, not just tech and gold, but also materials and industrials. So two more broad, large comparisons I want to take a look at before we go, and that is the small and mid stocks versus large cap stocks. This tug of war it can be very dramatic. And of course, anything that happened around COVID was dramatic, right? From a market standpoint and a financial standpoint. What do we have? We have this little hooking and this little potential reversal where the 500 largest stocks may be losing some ground to the rest of the US stocks that are in these two indices. And what we would look for strong confirmation of that is this to burst through and start, looking more like this here. And really kind of even more interesting and exciting is the relationship between large international and large US stocks. There hasn't been a recommendation to buy international stocks in maybe a decade. It's been a very, very long time since we've looked seriously at positions in international stocks. But I think we're starting to see that change. Down here, we have this little island reversal. We would want to see this assert itself here and break out of these areas. And, again, longer term, US doing quite well against international. But things change, right? And we want to be aware when they do. And if we look from a year-to-date basis, put on the green, up and to the right for international, largest international stocks up almost 7%, US stocks not even up 2%. So this is a really interesting opportunity. And if we go, again, a little more granular, we see Latin America, Brazil, Germany, Europe, Switzerland, developed, international, developed world, ex-Japan, Asia Pacific, emerging markets, Bloomberg market democracies taking out communist countries, United Kingdom, developed market, ex-US small cap Japan, all outperforming our lovely S&P 500. Some dramatically so. Brazil, Latin America up double digits, the S&P is up 318. Okay, so this rotation creates opportunities. We need to take a look around and see, are these opportunities for us? Is this a way for us to make money? So just because, and this is this chart, the S&P 500 index up and to the right, and we likely will have, if we close where we are right now, we're going to have a new all-time high. Okay, that's not bearish, but are there other opportunities that might make us some more money than just staying in pure defensive, pure, heavy tech weighted, heavy large cap weighted stocks? We'll see. And we're going to keep seeing and keep looking to review Domestic factors are holding up well. Rotation into precious metals continues, and new rotations in international small and mid-cap stocks could provide some pretty interesting and exciting opportunities as we move into 2025. Again, ring that bell, subscribe, do all those things. Call me if you have any questions. Go to the website, DeAndreFinancial.com. Ask me anything. Top right corner. You can schedule an hour, a half an hour, whatever you need to either set up your review or ask if you're new to the firm and you just want to, ask a general question. Happy to chat, happy to talk and discuss that with you. Have a great Valentine's Day, and we look forward to chatting with you soon. Take care.